All right, good morning, y'all. We should be good to go to jump on in here. Hope you had a good weekend. So this should be a pretty interesting week. Let's recap what took place last week, and pretty much here got the daily squeeze with the SPY for the last month or so. And now last week you're seeing some selling pressure and some distribution across a few different sectors, putting a little bit of pressure on the old girl here, putting a little bit of pressure on the market. So the industrials last week, complete loss of structure and momentum. So, I mean, this was pretty big selling pressure. Thinking in terms of, what's a good move? 2 plus ATR extension, -2 extension, that's a pretty good move. So anytime you're looking at +3 or -3, it's either a really strong move or it's a really weak move. In this instance, being to the downside, that's some pretty significant selling pressure. The financials, they're under -3. So recent leadership just completely gets sold off last week. And then the transports, the old transports here, they're hanging out under -3. So a few different sectors seeing some pretty good selling pressure last week. Let's check out energy here. And energy didn't quite get the thumping that the industrials, the transports, the financials did, but it's also a loss of structure. You got red 10x bars, so some good selling pressure across the board in a few different pockets of the market that put some pressure here on the squeeze for the index, for the S&P 500. So that's one side of the story. And then on the other side of things here, on a positive note, you do have tech stocks leading the way here. So I think the most important chart when it comes to technology is going to be this weekly chart. Maybe not this week. So maybe not so much in the sense of the next 1 to 2 weeks, but thinking in terms of the next month to 2 months potentially, this is a beautiful weekly squeeze and it has the perfect structure. So, I mean, I'm a little bit, I don't want to say bearish on the market. I'm short the market right now, but I'm not going to argue that the Qs, at least on a weekly chart, this is picture perfect. You got stacked DMAs, you've got green 10x bars. So the weekly chart looks really good here. The daily chart, this still looks pretty clean as well. So there's no arguing. Technology is holding up pretty good here. My only gripe is if that's where the momentum is going to be, and if we want to get long right now, if that's where we're going to want to focus, we still want to pick our spots wisely. So unfortunately for me, something like an Amazon is just off limits up here. Working off of my checklist, I'm never going to get long at the +3 ATR extension. So I would need a pretty good flush here on Amazon before I'm confident of taking an entry. There is Microsoft. And Microsoft isn't as extended as Amazon, but it's not the ideal entry back here at the 21. So I think you make your life just so much easier as a swing trader. You build your position back here at the 21, then you're paying yourself on this push into +2 to +3. That's a lot easier than trying to build a position up here, because now you got this growing probability that just around the corner, you're going to have to sit through a dip back down to the 21. So Amazon and Microsoft, they're not ideal for an entry here. What does look pretty good, just being objective, is Facebook. This actually looks beautiful. Daily trend is intact, so we got a brand new daily squeeze. We're holding support here at the 21. You've got green 10x bars on every big time frame. You got stacked DMAs. That's a beautiful structure. My old friend Google over here, Google still has a beautiful structure. Got stacked DMAs and there's green 10x bars, and you are dipping back towards the 21. So no daily squeeze like Facebook, but this is still an attractive chart. So I like Facebook here. I like Google. The major thing I have to take into consideration, just conversation's sake, and thinking in terms of risk management, maybe the market bounces here, and early this week we're back above the 21. There's not much selling pressure. Then I think the market can hold up just fine. But with all that distribution in the industrials, the transports, the financials, the energies, all that selling pressure putting a lot of pressure on the market itself here. If we do end up seeing this daily squeeze firing short, and again, for conversation's sake, let's say we pull back to the 21 EMA, which is a healthy pullback, and we really haven't tested the weekly 21 since November of last year, October, November. So that's just a healthy pullback. We mark that up here on the weekly chart. So I guess my big question, if this daily squeeze for the S&P 500 does fire short, let's say we get a flush down towards 40.50, is technology so strong that it continues to rally higher in the face of that selling pressure on the SPY? Or, which for me would be ideal, do you see technology come in a little bit because of the pressure on the overall market? Then we're getting better, I think, pullback opportunities. A dip here to the daily 21, or even better, a dip to the weekly 21 for the Qs. I'm probably going to be a buyer there. Something like an Amazon. You got this gorgeous weekly squeeze. You got a really extended daily chart. If we get some selling pressure in the SPY, and if that does bring the Qs down with it, I love Amazon on a pullback. So I think the answer for me at this point is, the realization that Qs, they're going to do whatever they want. I would rather miss the rest of the move to the upside and wait for that potential pullback. So we might not get that pullback. And at the end of the day, it's all going to be about the SPY here, my friends. If the SPY gets back on its own 2 feet, the Qs are probably going to continue to rip here. They're going to continue to rip higher. But if we do flush and we do make a move down towards 40, 50 or so, that could put some pressure on the Qs. And I just love an entry on an Amazon, a Google, or the QQQ itself. I love an entry on a pullback so much more than where we are right now. So I think for me, that's going to be the focus. And believe me, just because Amazon is up here at plus 3 ATR, it doesn't mean it's not going to rally straight into a new all-time high from here. It's just thinking in terms of probabilities. You try to build a career around getting long at plus 3, and you're going to sit through a lot of painful pullbacks. Pullbacks which I just personally choose to avoid. So that's my perspective here, y'all. And whether you're looking to go long or go short, pick your spots wisely. So if you're looking to go long right now, I just don't advise you do it on something like an Amazon that's up here at plus 3 ATR. I think you could get a better entry than something like a Microsoft that's up here at plus 2. And if you're looking to go short, it's the same principles that apply. We don't want to look to go short here. The industrials at minus 3. We could continue to flush, no doubt about it. There's also a growing probability that if you get short here, you're going to sit through a pretty painful bounce back up to the 21. So we're not shorting the industrials down here. We're not shorting financials down here. We're not shorting transports down there. Where we would potentially short these things is on a bounce back to the upside. Bounce back to the 21 or even the minus 1 ATR extension. That's where I think you look to go short. So this whole discussion of shorting right now, I do think a short on the SPY or the SPX, it makes the most sense from a few different perspectives. One, you haven't gotten that big release of energy. So the financials got smacked, the industrials, the transports, they took a good thumping. I'm not saying the beatdown is over, but the SPY here, you're looking at this chart and it's still in the buildup of energy phase. You still got this daily squeeze, which hasn't quite released to the downside. And if you're looking to short here, you're getting an entry near the 21. So this way, you're going to short near the 21. If we do flush, you're taking advantage of all of that versus getting short down here. And now you got to sit through a bounce and you got all those headaches. So if you are looking for a hedge, if you're looking for some short exposure, I think doing it here on the SPX or the SPY, it makes the most sense. From the perspective of you're positioning yourself in a squeeze and you're positioning yourself in something that hasn't already flushed. And then, hey, if you want to short the transports, like you said, a few alerts here. You wait for that bounce, then you can look to short that. You just don't want to do that down there at minus 3. In terms of being able to build a career as a trader, that's one kind of simple but huge component. Nowhere to get long, nowhere to get short, nowhere to take entries, nowhere to take profits. So it's going to be an interesting day. I think for those of y'all, or just all of us in general here, if we're looking for the market to avoid potentially flushing from here, there's a few different things you want to see. The most important thing is that we start to close back above the 21 period EMA on the daily chart. To the extent that we continue to linger and hang out here under the 21, the daily squeeze just continues to threaten to the downside. So if we can get a good bounce here, and then you get one or two closes back above the 21, the market might have done a good job here of brushing it off just like it did back here. Then you're back towards the upside. So keep an eye on the 21 EMA. Back above it, we're doing a pretty good job of holding up on our own 2 feet. We continue to hang out underneath the 21. That's when things can get a little bit interesting to the downside. And then focus on the internals here. If you look at the volatility index, in the VIX here, the VIX plays a big role in, I think, timing your trades. If you're looking to get short the market, you want to do that not only before the market has made that flush into -2, -3, you also want to look to short the market before volatility spikes. So for the same reasons we don't want to short the industrials down there at -3, we also don't want to go short, generally, when volatility has pushed into +2 to +3, especially that big push into +3 ATRs. Once that move in volatility unfolds, now there's a growing probability, unless we're looking at something like the coronavirus. If you look at the corona, the vid, we just kept freaking going here. But more often than not, you get that big spike to +3, then volatility is going to die back down, and usually with that, the market is going to make a pretty decent bounce back towards the upside. So you don't short a stock when it's at -2, -3. You also be careful about shorting if the volatility index has already made that big push. If you're going short over here, let's look at that on the overall market. When VIX is ripping through +3 on May 12th, if you're going short on May 12th, where it is May 12th, you're shorting right at the bottom there. So you want to short inside the squeeze before we flush, before volatility makes that big spike. So that's the timing component that we got to pay attention to here. But that's a key level here for this buy, obviously, is the 21 EMA. And then for the Qs, it's a good looking chart. So, really key support for the Qs is going to be the 21, which pretty good fade would bring us down there. But that's my focus right now, y'all. Keeping it pretty simple. So for the SPX here, I got a call credit spread that expires in August, and I sold calls up here at 4,300. So I've got some pretty good cushion. And when I took the trade on Thursday, I got about pretty close to a 1-to-1 risk-reward ratio. Had you have done that trade on one contract, I think you're risking $1,100 to make about 800. So it's a pretty good risk reward. I think I did about 15 or 16 contracts. So that's the move I got there. I did take profits on Costco last week, albeit really small profits, maybe 20% of max profit. There's nothing wrong with this chart at all. I'm just more apt to take the small profits off the table on long positions when market's looking potentially a little bit sketch over here. And then the good news is, hey, if the market rebounds and we get back on our own 2 feet, we got a good structure, I can jump right back into Costco. Just got to pay some commissions to get right back in the door. But that's about it right now, my friends. I do have my position in Playboy, which is a dud at this point. So I've kind of written this one off, but I will hold on to it for entertainment's sake. But that is what I got for y'all here. Going to be an interesting week. So I got this short position on the SPY, and I don't think this is a position I have to add to. I like the spread. I like my entry. I like the cost basis. I think at this point it's a matter of, one of two things is going to happen from here. We're going to fail to get back above the 21, and we're probably going to make a pretty good flush. Or we do get back above the 21, get back on our own 2 feet, then we could start grinding back towards the upside. So I'm pretty much waiting on one of those two things to happen here before I start taking any more action. If we don't get back above the 21, I'm going to collect the premiums from the call credit spread. If we do regain some structure, then I'm going to be running my scans, and I'm going to look for something like a Costco that still has a good structure with a squeeze and stacked EMAs, and then I'll look to build a long position there. All the while, I got that short in my back pocket, which could serve as a nice hedge at that point. Russ, NVIDIA is an interesting one right now. I'm not going to argue with you here. It's really extended on the daily chart. Here's what was really interesting last week about the semiconductors. If you look at the chart of just the ETF itself, SMH, holds up pretty good last week, right? Compare this to the industrials or the transports. Hey, the semis look pretty good here. You got to dig beneath the surface, though, to kind of see what was really going on here for the semiconductors. This chart looks okay for one reason and one reason only, and the reason is NVIDIA's been a total rocket here. So the bigger stock within the sector has just been so damn strong here, it's masking the selling pressure in the other semiconductor stocks. So because this one behemoth here is performing so well, collectively, the basket is in okay shape. But if you start to look across the board at a few different semiconductor stocks, Micron broke down last week. Ugly looking chart, just loss of momentum. There was some selling pressure in Micron. If we check out Qualcomm, that wasn't ripping with NVIDIA last week. So, is there strength in the semiconductors, or is there just strength in NVIDIA right now? Let's check out Micron. Let's see, LRCX. LRCX, it starts to lose some structure. So I just think an interesting observation. Industrials look ugly, transports look ugly, financials look ugly. The semiconductors don't look all that bad here. However, I think it's a one-trick pony right now. It's NVIDIA. So just an interesting perspective. In terms of trying to short this for a move down to the 21, I definitely get where you're coming from. There could be money to be made here. Here's my only difficulty with that, is you're fighting this weekly squeeze. So if there's ever a time when a daily chart is going to get really extended, from +2 to +3 and just +4, +5, just keeps on getting more and more extended, it's going to be when behind the scenes here, the overall move is being driven by a weekly squeeze firing to the upside. So this big time weekly squeeze here that took place for almost 7 months. So the weekly squeeze, it starts back there in November. It's finally releasing all that energy right now, which leads me to believe, that daily chart is extended. However, it's got a lot of strength and momentum behind it. So that's the one thing to take into consideration. That's what's driving the bus right now, is that really powerful weekly squeeze. So for me, when I see something like that, I'm actually more inclined to wait for a pullback to the 8 EMA. I mean, I love the dip to the 21. If they give it to me, I'm going to take it. But with that bigger picture weekly squeeze driving the bus here, I'm more inclined to avoid trying to short it. And if it does come back in, maybe picking up a small position at the 8, or even better, a bigger position back here at the 21. So I think it's just always good to go through a few bigger time frame charts, get a true sense of what's driving the bus here. Right now, it's this big-ass weekly squeeze. Eric, Roku. Roku was interesting last week, Eric. Generally speaking, there was some selling pressure out here in these streets, but Roku, Shopify, a few others, they were looking pretty killer last week. Now, admittedly, it's not something I would trade for a few different reasons. One, I don't like the overall, kind of loss of momentum here. We don't have positively stacked moving averages. So for me, it's just not clean enough. Let's say it was clean enough. I still would rather not get long up here at +2 ATR. I'd much rather wait for a pullback, get long here at the 21, and hey, if I don't get the pullback and Roku just rips to 400 from here, then so be it. There's plenty of opportunity out there. So they were definitely some, there were signs of strength over here. Roku, I think Shopify is another one. And Shopify, I think, does have a clean structure right now, but it's just like Amazon. I see the strength here. I know it could continue, but I can't break all my rules and get long up here at +3. So, with the market kind of teeter-tottering right now, this is going to be interesting to see what's the outcome here. Now is the time to be really strict, especially to the upside. If you're going to be getting long right now, I think now is the time to be really, really strict. You want to get long something that just, from every aspect is picture perfect. And obviously for all of us, that's different. Picture perfect is a subjective thing. But listen, y'all, it's 10 minutes before the open here. I think I got the open over at Simply Trading this morning, so I got to cut y'all off now. But I appreciate you listening in. Hopefully I've given you a few things to take into consideration. Wish I could hang out for a few more minutes, but I will see y'all again on Wednesday morning. And for those of you in Simpler, I'll see you in about 5 minutes here. So let's kick some ass this week. Go get them, y'all.